Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is March 2nd, 2012, and it's Friday, and that basically means that we're going to go over all the 16 major markets that we can track at PerfectStockAlert.com, so you see everything that I see moving into the week ahead. And this is a very important video. If you watch any video during the week, this is the one you definitely want to watch. And we're going to cover something or reveal something today that's really going to help a lot of you understand how to trade this particular market. And the first thing we have to do is cover a couple of the ground rules here. To do that, we must establish what exactly the market is doing so that we know how to work within it. So let's look right now at Australia's market. Here's the previous peak that you had. There's a big move to the downside, and then you had this move up here to test that previous peak, and you just didn't break through, so you pull it back. Then you tested it again, couldn't break through, so you pull it back. Then you come up here and test it again, and you obviously break through, you get a higher close, and then what do? You simply move sideways, okay? Now this is something you're going to be seeing again and again and again in the global markets. Remember that. Okay, overall in this chart, we could say that this is actually where we're trading range right here, okay? We're just moving in this little range. On occasion, we have dipped below it. Did we break down and start selling off? No, because the overall trend, the overall pattern is sideways. So when you get that major dip, you actually get a situation where you reverse back to the upside. We were actually able to play that, expected that to happen, and we got that reverse back to the upside there, so we were able to take our shorts off the table before that happened. But I want you to think about that when you're looking at all these markets I'm about to show you, because they're all doing this exact same pattern, moving sideways in one variation or another. Okay, here we are looking at the U.S., the Dow Jones Industrial Average. Typical advance going on here, but you'll notice once we broke down the major uptrend line that we had going on, we started to just kind of drift ever so slightly sideways. That's all we're really doing. There is a bit of an upward bias to this one, and we'll see in other markets as well that you can see a bit of an upward bias, but they are all lackluster and advancing to the upside. That's why I keep saying I would not trade the overall averages that I'm seeing out there. I would actually be looking for individual companies within the average, and we'll get to that in a minute, but that's the secret right now. Here we see the French 40 index. You can see the basic overall pattern. Once she broke down, she's just basically moving sideways. This one also has a little bit of an upward bias to it, but no major moves here. It's not really easy to trade this particular average or the averages overall right now and make good money, not compared to what you could be doing by trading individual companies which actually make up the overall average. I'll show you how to do it in a second. Here we are looking at the German DAX composite. You can see that this one actually got us to be a buyer at this point over here. Oh, we actually issued it after that close, so it was this day that we actually started to be able to buy. And you'll notice we have a stop right here. We did not break this stop, and we started to drift to the upside here ever so slightly, which have actually given us a small profit. But I don't actually expect this market to do anything amazing like this or anything like that. I expect this sideways overall pattern that we're seeing to just kind of continue. We may be like this. We may do it a little upward bias like we're seeing in a couple of other major markets. But it's just something that's just happening with the global markets. With this one, even though we have a gain on the table, I would just take the gain off the table. Where you want to be trading right now is individual companies that are actually going against the trend temporarily, and I'll show you in a second why. But I did a video just a moment ago that I uploaded that shows an individual company that is a good trade opportunity on a long side because it is not actually doing the sideways pattern that you're seeing. What you have in basically when you're looking at a chart, whether it's the Dow Jones, the S&P, whatever you're looking at many different companies that make up that average. So you want to find a company that is following that average. It's made a higher series of highs, and instead of moving sideways like the overall markets may be doing, it has actually dipped below that. Whether a little bit or a lot, regardless, when it starts to turn back up, you know why it's turning back up, because 90% of stocks follow the overall markets. Therefore, if the overall markets are simply maintaining that high and moving sideways, then these individual outlying companies are going to do what? They're going to start to reverse back to the upside and move higher and follow the overall trend. So use those opportunities where they've dipped down below individual companies, not averages, but individual companies that you can use within the average, and that will give you that opportunity. And that's what we've been doing at PerfectStockAlert.com, taking advantage of that trade. That's the trade that we have right now. Okay, here we are looking at gold, and gold is a situation where you could actually be a buyer now. and expect that same scenario. What we have here, previous high, you had a sell-off, then you had to move back up to that level, and then we kind of wobble along it, but we're basically just moving sideways, right? Right. So this dip you're seeing right now, where you basically call it from about here, is actually trading below that basic thesis that we have going sideways there. So when she does that, you could be a buyer there, and that's actually an opportunity that I missed over here. I didn't think about that when that first happened. I'm sure I followed a bit further before reverting back to the upside. She didn't do that. She's actually started to now firm up and so show some support here, and that is because the overall trend, and I've already said, is moving sideways. The Hang Seng market, the Hong Kong Hang Seng, you'll notice that even though they're on the other side of the globe, for me, they're not really doing anything different. Previous high, pullback, breakout, kind of move sideways with a bit of an upward bias, ever so slight. Again, I would trade individual companies, not the average. The India Bombay Stock Exchange, or the BSE, same overall pattern, only this one's giving you a bit of a pullback, which is actually an opportunity to buy. Actually, I'll update this chart later this weekend to have a little buy signal here with a stop loss limit there. You can actually trade this, expecting her to just trade this way. It's not actually going to be a big money maker here. You may even actually get a move up here before she starts to dip over again. She's going to move sideways. That's basically what the global markets are doing. So you could make a little bit of money here, but again, you'd make more trading individual companies that make up the individual average that you're looking at here. Japan's iShares EWJ, same overall pattern we just looked at. This one, of course, is given another little pullback here. It's actually had an upward bias the entire time, so you may trade this on the long side if you wanted to. I'm not going to do that. I would find a great advantage to trade individual companies that make up an average opposed to actually the average right now. The London Financial Times Index, or the FTSE, is probably the best example of what I'm talking about here, where you've had this move here to the upside and then just flatline, just basically maybe a slight upward bias, but she's not really doing anything. If you've been a buyer here, you might get stopped out. If you've been a buyer here, you get stopped out. If you try to buy this, you're really not going to make any major money to the upside. However, if you found an individual company within this average that had this same overall pattern, and they had moved up here and somehow had pulled back on these down days here more substantially and started to move back up, you would have the opportunity to make a lot more money than trading the average. The NASDAQ has broke its major uptrend a few days back. We already covered that, and you'll notice we are still drifting to the upside and now rolling over a bit. We're just kind of following this overall pattern with a little bit of an upward bias. Again, go find individual companies that make up this average. Don't trade the average itself. Oil's giving a little more consolidation, pulling back down to this major uptrend line that you've had here. As long as it holds that support, it's a good buy off of that support. But again, you're going to notice the same overall conditions going on here. Just moving sideways, a little upward bias, not any major moves going on right now. You're probably better off, again, it's like a broken record, probably better off finding individual companies that can benefit from higher oil prices as opposed to trying to trade oil. Looking at the UUP, or the Power Shares US Dollar Index, Bullish US Dollar Index Fund, this is going to be actually kind of tricky, and it's actually faked me into a couple times already. This situation you see here, where you have a high point here and then a higher high here, you can look at it and say, well, maybe she's going to reverse now and the market's going to start selling off. No, stop falling for that BS. We told you before, looking at a couple weeks ago, I think it was, we showed you that the markets are actually going to keep moving higher. It's going to grind higher there. It's not going to stop right now. You've got a series of higher highs here, but you've also got a series of lower lows here. When you have a conflicting signal like that, when you have two different signals coming to you, what the market's actually telling you is sideways. That's what that means. When you have both higher highs and higher lows, the trend is up. When you have lower highs and lower lows, the trend is down. And when you have a divergence like this, the trend is sideways. So it's just that much more confirmation of what I've already told you. The Russell 2000 Small Cap Index, I like this chart because of the consolidation time period here, and I don't want to be a buyer unless you get a breakout or that kind of a rally going on where you get a breakout. Then I would be a buyer at the breakout point, but we're not seeing it right now. We're just going to continue this overall pattern we're seeing globally. However, in this particular average, you can see that we're dipping pretty good here, and that can create a buy opportunity. Start looking, or I would be looking for a hammer candlestick formation, some kind of a reversal signal. We're not seeing it yet, but if we start to see that, then I would be a buyer with a tight stop and expect it to move back up into the channel and move sideways. But it's not happened yet. But if it started to happen, that's one way you could play it. However, again, you could play and make more money finding an individual company within this average, which is giving you much greater pullback. So you may have a situation like this, and then the company did this. Obviously, I'd rather make this money than this money, right? The S&P large cap index, S&P 500, you'll notice the same overall story here, but this one's giving us more of a slow grind higher in very small increments. But notice this situation you have here, where the close of these candlesticks are moving higher, but the momentum is moving lower. So what's actually probably going to happen is just kind of this little routine here, which ultimately will flatline itself into a little channel moving sideways, right? Quick look here again at silver. We talked about this one yesterday. It's a possible buy on the long side, looking for a move to go higher. However, with what I've been talking to you about, I actually don't really expect that. I expect kind of maybe a slow grind to the upside like we see in some of the averages, but overall you'd be better off finding individual companies, again, that would give you a better reward for the upside move there. What you're seeing here, previous high, you've seen this before, pulls back down, breaks out, moves sideways, bounces up and pulls back, just moving sideways here. You know the story. Anybody able to tell what this chart's doing? Yeah, you know. TSX, looking at Canada's markets, same thing as what we're seeing in the rest of the world, huh? That's right. Move up here, break out, then kind of just move sideways. Oh, a little lift off, and then no, never mind. Just moving sideways. Finally, we can look at the volatility index, or the VIX, and we can get a picture of what the S&P looks like from the options. And this runs the opposite of the S&P. So when it's moving to the downside, the S&P is moving to the upside, and vice versa. This one is obviously moving sideways. However, you got to note something here. Back in this time period, you were seeing a nice hammer candlestick formations, giving you signs of support here, which would be indicative of resistance on the S&P 500. Notice now when you're pulling back to these same levels, they're not there anymore. So what you're seeing, in fact, is that the S&P is not finding that resistance anymore. Individual companies are not finding that resistance anymore. And if you've watched the alerts that I've issued for the past couple of weeks now, I've been showing you that high after high, we look at the candlesticks, we're not finding signs of resistance. We're just moving sideways, which typically is a temporary situation where you move sideways and consolidate before breaking out to the upside and going higher. So that's something to think about right now. If you're looking at the market as a really bearish perspective, it's actually, I think it's too early for that. I think you can still move higher here, and you can definitely play, like I've been talking about throughout this video, opportunities where individual companies within an average have pulled back more substantially, because they will ultimately, remember, 90% of stocks will follow the overall market averages. Just do the exact same thing that they do. So there's opportunity out there for anyone who can think that process through in their mind and find individual companies like that. If you can't, check out the videos that I did. I did one today showing an opportunity that I see from a trade perspective. That's something you can look at and get a better picture of what I'm talking about. Okay. This week, well, before I do that, if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, this weekend, I'll be bringing out a lot of tutorial videos for you guys to check out. I think I'll do some trading tutorials as well as some fundamentals out there. And, of course, this weekend, I will do as I do every weekend, a value alert as well. Okay? God bless. Take care. Enjoy your weekend and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.